tweeted the other day, 2 days ago, I said probably the biggest risk to crypto right now is if we get a 5 or 10% correction in the stock market. And then 24 hours later, this is what happened on the stock market. You had the NASDAQ going down about 4%. You had, this is the NASDAQ being wiped out. $730 billion was wiped out from the US stock market. It didn't stop in the United States. In fact, if you look at what happened on the Nikkei went down 6%, that's in Japan, or 7%. And if you look at what happened in South Korea, the Kospi went down about, 6 or 7%, so much so that circuit breakers were triggered there this morning. Now, the big question is this the beginning of a much, much, much bigger stock market meltdown? And the question is that if it is, what actually happens to crypto? Because I go back to my tweet, the biggest risk I see right now is that the stock market corrects. I don't believe that crypto can weather a big stock market correction. Or can it? That's what I want to talk about today. I want to show you what's causing the stock market correction, and I want to show you my view as to how this plays into the crypto market. And let me tell you, it's not that pretty. So, guys, big show today. I was hoping not to make a show like this, but here we are, and we've got to accept what the market's given us. Let's get the show on the road, guys. I must say that it's getting a little bit scary sometimes when you call the market. Oh, why is my music not working? There we go. Sometimes when you call the market and the market just lands up doing exactly what you say it's going to do. Now, I love it when my calls are up and whatever else, but right now my calls have been a little bit like, look, I think we're going to go under 100. We're going to get down to the $95,000 level. I'll actually show you how we get down to the $95,000 level today and why I think this is actually quite a good thing, what's going on in the stock market. So we're going to talk about all of that. I think it's going to be a big show. So guys, if you are new to the channel and you're not already subscribed to our channel, what are you waiting for, guys? 1.181, come on, let's get it to 1.82 million subscribers this show. It's 107 subscribers. Let's see if we can get 107 subscribers. Also, if you are here and you are subscribed, smash a like button. Let's see if we can get more likes than yesterday. It really brings in more people to the show. I've got a big show for you guys today. Lots of alpha. Let's talk about where we're at. So, as I said to you the other day, I am very concerned about the stock market actually taking us down here, because I think crypto has been smashed so hard, and the last thing that we can afford right now is the stock market actually going down. I don't know if crypto can withstand a 5 or 10% correction in the stock market. At the same time, when I look at the stock market, I'm like, there's definitely a 5 to 10% correction in the stock market. Just look at this chart over here. You can look at this channel, and this channel is an 8-year-old channel. So if you look at this channel, let's just zoom out. This channel is an 8-year-old channel, and we're at the top of the channel. So logically, even if we are going to break through the top of this channel, I don't see it happening first time, which means that our best case scenario is that we do something like this and we go down and then come up again and try and breach us. But more realistically, we're actually going to start rejecting here, and we're going to get into some kind of stock market correction. And the question is, if we get that stock market correction, what actually happens in crypto? And it was pretty freaky, because as I tweeted this a couple of days ago, 2 days ago, the reason why I tweeted it is because I really thought that there's a high likelihood that this may actually happen right now. And this would be the catalyst that would actually push Bitcoin to the levels which I have been calling for since the 19th of September. You'll remember on the 19th of September, I turned around and I said, look, I think Bitcoin's going to between $95,000 and $100,000 before we actually get the end of this correction. Now, it feels to me like the one thing that could push us to do this is the correction in the stock market. And that's pretty much what I'm seeing the beginnings of right now. Because after this tweet that I tweeted, and you look at the stock market, less than 24 hours later, the NASDAQ corrected. The NASDAQ in total, I'm going to go all the way down to the bottom of the candle, because I think that's how you got to look at it. The NASDAQ corrected about 3.5%. The S&P, which was at all-time highs, also corrected. Let's just go back to daily. I think it's easier to see it on the daily. But the S&P also corrected by about 2%. And the contagion wasn't only in the US. Yes, in the US, about almost $1 trillion was wiped out of the stock market in the last 24 hours. But the contagion actually spread into Asia. And this morning, when we woke up, there was a bloodbath in Seoul. I woke up this morning, and when I woke up, the circuit breakers had triggered in Seoul. Because if you look at their stock market, in the last 2 days, the Seoul stock market in Korea is down 9%, And the Nikkei, which is the Japanese stock market, that Japanese stock market in the last 2 days is down about 7%. Well, it's now recovered. It's about 5% down, but it was down about 7%. So the question is, what's actually causing the stock market to get rattled like this? And why did they get rattled in the last 24 to 48 hours? One of the theories is, and I'm not really a big fan of this theory. In fact, I'm not a fan of any theory, because the way that I see it is, the stock market is overheated and the stock market needs a correction. And we will find reasons to justify the movement in the market, right? But ultimately, when you look at the stock market, when the stock market runs like this, and when the stock market runs in a single year, and or in fact, let's even look at it on a slightly bigger year. So let's look at it on a 2-year level, because sometimes you need to look at something on a 2-year level to make it make more sense. But when a market goes in 2 years, a stock market, and gives you 50% returns, and it gets to the top of a channel that the stock market's been in for the last 8 years or 9 years, chances are the charts tell you that the market has to correct. And I mean, we can look at the catalysts, but ultimately bring me the chart. I will find you the news to justify that chart. And the charts are telling you that the stock market needs to correct. Just look at the RSIs on the S&P 500 and look at historically how high the RSIs are relative to where they were historically. High RSIs means that markets should pull down and sentiment should reset, because that's what markets do. Markets toggle between extreme fear and extreme greed, and the RSIs measure that extreme fear and extreme exuberance and extreme greed, right? And so what you're getting is a normal correction in the stock market. Now, what triggered the correction? There's multiple theories. I mean, one of the theories is that, Zohran Mamdani actually won the New York mayoral election. Okay, now that is the theory. What is the theory? The theory is that New York, which is like the center of the world, the center of the financial world, or specifically the center of the Western financial world, is now in the hands of a self-proclaimed democratic socialist. This is what he calls himself. It's now in the hands of these people. New York, which has always been like a beacon for financial freedom and for financial innovation and been the hub of the financial United States, is now in the hands of Bernie Sanders, AOC, and Zohran Mamdani. That's the reality of where it is. And if you want a little bit of a taste of what this guy's about and what this guy's running on, just listen.
We will put an end to the culture of corruption that has allowed billionaires like Trump to evade taxation and exploit tax breaks. We will stand alongside unions and expand labor protections, because we know, just as Donald Trump does, that when working people have ironclad rights, the bosses who seek to extort them become very small indeed. New York will remain a city of immigrants, a city built by immigrants, powered by immigrants, and as of tonight, led by an immigrant.
So this is the guy who's been running on the promise of taking New York, which is the capitalistic, or has been the capitalistic capital of the United States, and basically putting it in the hands of the immigrants, of the workers, of the working class. And that's not a good look for the financial hub or the financial capital of the world. This guy is a self-proclaimed democratic socialist. Now, if you don't know what a democratic socialist is, I don't know either, but this is how he explains it, right? I've never heard of the term before he explained it.
How do you respond to that when somebody comes up to you and says, I can't vote for you because you're a communist?
I say there are reasons you might not want to vote for me, but let's be honest about my politics. I'm a democratic socialist no matter how many times President Trump calls me otherwise.
Yeah, explain the difference. What is the difference between a Democrat, a democratic socialist, and a communist?
Well, I'm a democratic socialist who's also a Democrat.
Right.
And when I say I'm a democratic socialist, I explain it in the words of Dr. King from decades ago, who said that call it democracy or call it democratic socialism, there must be a better distribution of wealth for all of God's children in this country.
Right.
And what I actually find is that when you're speaking to New Yorkers, they ask you less how you describe your politics and more whether there's room for them in that politics. Right. And New Yorkers are asking me, does your
So
politics...
this is who the guy is. So now you're taking New York City. And I mean, just to be clear, he ran on campaigns such as what he wanted to do was do free buses, freeze rentals in the United States, and have grocery stores that are owned by the government. Get this, because the government does such a good job when they own things. He wants to run groceries. Yeah, he wants to have supermarkets run by the government. Now, this is how Andrew Cuomo, who lost against this guy, this is how he describes the promises.
Were I call them the TikTok promises that he put forth in the primary. None of them are real. The mayor is going to freeze the rent. People think it means he's going to freeze their rent. No. First of all, the mayor has no ability to freeze anybody's rent. No legal ability. It's done by an independent board that is term appointed, and then it's only for about 25% of the housing units, called the rent stabilized units. So it will have no consequence. It will never happen. We're going to have a government-owned grocery store, one in each borough. We have 16,000 grocery stores. 5 grocery stores are not going to make a difference. Free buses. It's not up to the mayor, it's up to the state. State said they're not going to do it. It's all BS. It's all campaign rhetoric.
All
None
campaign
of it
rhetoric,
will
all
change
BS. But the thing is,
anybody's-
he's now won, and he's campaigned, and he's got the people's vote. And so now you've got to ask yourself a question: who is going to move into New York, and who is going to move out of New York, right? And I heard this take by Patrick Bet-David, and I really think it's actually worth listening to.
So now that Mamdani won New York City mayoral race, here's a question I got for you. Who do you think's moving to New York City? Who's actually moving? Not forget about the people that are moving out. 756,000 families are definitely thinking about moving out of New York City. No. Who's moving to New York City? You may say nobody. You're wrong. A lot of people will. But you know what type of people? Let's go through it together. You think job creators are moving to New York City? Probably not. You think investors are moving to New York City? Probably not. You think families who want safety for their kids and the criminals to be kept into prison are going to be going to New York City? No. You think people that are pro Second Amendment, safety, low taxes are going to be moving to New York City? No. But who will be moving to New York City? If you're a criminal, it's a great time to move to New York City. Think about it. He wants to let people out of prison. Guess what? I'm not telling you to move there, but it's a great policy. If you're somebody that doesn't want to work at all, and you just want entitlement programs, this is a massive opportunity to move to New York City. Massive opportunity to move to New York City. If you're an illegal immigrant, are you kidding me? Like, this is heaven for you. He will protect.
Anyway, so that is what one of the theories. I mean, I don't believe that theory could crash the market. I'll give you some other theories. So the one other theory is around the Treasury General Account. And remember, we spoke about the fact that the Treasury General Account basically sucked out half a trillion dollars out of the economy because the government has been shut down. And what's basically happened here is they basically have to now replenish the Treasury General Account, right? And they did, and they took out $500 billion out of the economy and put it in the Treasury General Account. Why? Primarily because the government is closed, and the government is still in the government shutdown. And that brings me to the next theory here, right? That the government shutdown is now the longest government shutdown in history by far. And a few seconds before the show, I saw a tweet that actually came out. I want to see if I can actually get us that tweet, where they're talking about whether or not the government will open. Whether or not the government will open now or this week, because I'm hearing a lot of news that the government may open this week. Trump said on the shutdown, he said it was a big factor in the election. He noted that last night was not expected to be a victory in Democratic-leaning areas. Said he doesn't think the Democrats will act soon and the issue won't be resolved quickly. He added the shutdown is now actually affecting the stock market. So Trump's basically saying that the shutdown, and maybe as a result of the Treasury General Account, maybe because of a whole lot of other things, but now the shutdown is actually starting to cost the economy. The market is starting to get nervous because what the market doesn't like is the market doesn't like uncertainty. When you have a government shutdown for a short period of time, it's cool. But when you have a government shutdown for a long period of time, the government starts to get nervous. There's no data. We're flying blind. We're not getting unemployment numbers. We're not getting anything coming out right now, right? And that is starting to make people worry. And initially it hit crypto. And basically what happens is it's almost like the most volatile gets hit first, bang, crypto falls. And then what fell next was actually the NASDAQ fell, right? And if you look at how the NASDAQ fell, it fell much, much, much more than the S&P, because the NASDAQ is seen to be more volatile and more risky than the S&P. And so that's another theory for what's actually causing this market to correct, right? The third one, and the one that is now probably the most widespread accepted reason why the market's actually starting to crash, is because of AI valuations, the AI bubble, the fact that the AI valuations just don't make sense. The AI spend just doesn't make sense. I mean, just look at this. This is like the craziest thing I've ever seen. I want to show this to you, right? So, if you want to summarize it, investors are growing skeptical of colossal AI spending plans backed by tech giants like Meta and Microsoft. Meta said they're going to spend another $70 billion in 2026 on AI and AI data centers and stuff like that. And the market's kind of going like, can we actually sustain these crazy spending valuations? Now, the one thing that the market doesn't like is that this AI bubble seems to be just a bunch of companies all transacting with each other. So it's like OpenAI goes in at a very high valuation. It does a deal with Oracle, which is, by the way, invested in OpenAI. Oracle is also invested in Nvidia. Oracle then goes and invests in Nvidia. And it just feels like this incestuous, you know what this feels like? The equivalent of Sam Bankman-Fried, Alameda, and FTX. It's like you borrow money from Alameda to fund FTX, so FTX can have a bigger balance sheet, so that Alameda can have a bigger balance sheet, and basically it becomes this loop of like 7 or 8 companies just interacting, doing loops amongst themselves. OpenAI says to Oracle, hey, let's do a deal, pushes up Oracle's valuation. That Oracle says on the back of the AI deal, that pushes up, and they go and do a deal with Nvidia, that pushes up Nvidia's valuation. Nvidia then do a deal with OpenAI, that pushes up OpenAI's valuation. Now, I was listening to a podcast this weekend, and this clip came out of the podcast. Probably one of the craziest clips I've ever heard. What Brad Gerstner is asking you is, he's saying to Sam Altman, you are a company that has $13 billion in revenue, but you've made $1.4 trillion in commitments. Who have you made the commitments to? You've made the commitments to the bunch of friends and this incestuous bunch of people that you're all dealing with, right? And I want you to just notice how Sam Altman replies to this.
Is how can a company with 13 billion in revenues make 1.4 trillion of spend commitments? And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer.
That's not what you want to hear from the CEO.
Enough. People are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would.
Including myself. Including myself.
People who talk with a lot of breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly.
Now just imagine, now just replace Sam Bankman-Fried with Sam Altman, and ask him about how you can sustain the FTX valuation. He says, well, you know what, you can just sell me your FTX tokens. That's not what you want to be hearing. It just feels unsustainable. And it feels, I don't want to say the word scamming because I don't think they're scamming, but it just does feel like there's an AI bubble forming. And now all of a sudden what you realize is that is now starting to basically hit the markets. The other theory as to why the markets may be going down is because Michael Burry went and put a very, very, very big short on the markets. And Michael Burry's the guy from The Big Short. And he put a very big short on AI, or on the markets, specifically on AI, and specifically on Palantir, which is Alex Karp's company, and on Nvidia. And he's basically saying, look, there's an AI bubble. These two, which by the way are carrying most of the S&P up and most of the NASDAQ up, are the biggest. And he's placed his big short on these two companies. And that's got investors nervous. Listen to this.
Advantage to American workers, American warfighters, and our investors.
Being short is a very difficult place to be because you can lose everything, right? You can drive these people into the ground.
Thank God.
Like Michael Burry put a really big bet on it. It's almost $1 billion. It's $912 million. That's a big step for him to put into that. When you say you redouble your efforts, what do you do? What do you go back in?
Well, first of all, it's like he's actually putting a short on AI. So the way I read it was us and Nvidia, and it's like
yeah,
he's
the biggest position is you, though.
Yeah.
I'm just through all of his shorts.
Great. Okay. So, and then, by the way, with the shorts, it's very complex. It's not even clear that, honestly, I think what is going on here is market manipulation. We delivered the best results anyone's ever seen. It's not even clear he's not doing this to get out of his position. I mean, these people, they claim to be ethical, but, like, they're actually shorting one of the
So
great...
who knows what the actual reason is, and who knows whether Michael Burry will make money or not make money. I think the bottom line is, I think we're wasting our time trying to justify market moves with fundamentals. Yeah, I can spin the story for you and I can bring you the fundamentals. But ultimately, you want to know why the stock markets are crashing? That's why the stock markets are crashing. They're crashing because they've been performing very, very well. And when markets go up a lot, they go down a lot. That's just how markets move. Let me just get you some more information over here, right? So when markets go up a lot, they go down a lot. That's what actually happens. And the S&P has gone up a hell of a lot. You can see it in the monthly chart here. You can see it at the top of the channel. Now, yes, we could break out of that channel, but don't think we'll break out of it first time. I think it'll be a long, long, long test before we break into a completely new economic cycle, right? And I mean, if you look at the valuations in stock markets, just hear this out. This guy tweeted, he said, is there anyone else that's concerned about the US economy and consumer spending? Is now almost entirely reliant on the second largest stock market bubble on record. Long-term average Shiller PE ratio is 17.8. And today, the market is trading at double that. So it's trading at over double that, 39.8 times multiple. Only the stock market valuations, the only time the stock market valuations were richer was in 1999. That's the reality of it. The markets are expensive. And when markets become expensive, markets oscillate between being expensive and being cheap. They're expensive, and when they are expensive, they correct. And when they're cheap, they go up again. And that's why markets go up and down and up and down, because they oscillate between being expensive and being cheap and being expensive and being cheap. And right now, we are at the part of the cycle where markets are expensive. And so when markets are expensive, stock markets, we can expect them to correct. And they do correct. And when you look at the corrections, generally the market corrections aren't that big. They're 9%, 8%, 5%, 5%, 10%, etc., etc. Now, I'm reminding you that we are already 5% down from the top, or 3% down from the top, depending on which market you look at, right? Now, every so often, we do have a big correction. This was the tariff correction over here. If you go back much further, you'll get to the COVID correction. Markets correct. Generally, luckily for us, for the last couple of years, we've been in a bull cycle because of money printing and because of everything else and because of the AI, call it a bubble, call it not a bubble, the AI revolution, whatever you want to call it. Markets will correct. And we may be seeing one of those corrections. And now the only question is whether it's going to be a 5% correction, a 10% correction, or whether we're going to have a little black swan, but then we're going to recover very, very, very quickly. That is basically where we are in the market. The S&P is still way above any kind of capitulation levels, scary levels, etc., etc. That's for sure. But people are nervous. And you can see it in the VIX, the volatility index. Why are people nervous? Well, pretty much because when markets get to all-time highs, people, it's almost like, if you think about it, I don't know if you see one of those like atoms that basically goes up and up and up and up, and it starts shaking and shaking and shaking until eventually it explodes. The higher you get, the more energy that is in the market, the more worried people are to actually lose the money, right? The higher you go, the more worried people are to actually lose the money. And so every small move gets people very, 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 very worried. And that's why you're in a situation where the markets are 3 or 4% away from all-time high, but the market sentiment is at extreme fear. Guys, you're at extreme fear? Like, You want to know extreme fear? Come and trade shitcoins for a while. Come and trade meme coins for a while. That is what you call extreme fear. So that's the stock markets. Now the question is, how will the stock markets actually affect Bitcoin? Will they actually affect Bitcoin? So remember, I published this tweet a while back in September, and I said, look, my targets at the time were between 95 and 98, and you can't really hold me to the targets of 95 to 98 because I think it could go a bit lower, maybe. We're very, very, very close to this, but we're still above the psychological level of the $100,000. Now, I think that what's going to happen is the stock markets are going to start correcting. And when the stock markets start correcting, they're going to push the markets below the $100,000 Bitcoin level. And I think that wick that takes us below the $100,000 psychological level will take us to around $95,000 to $98,000. And when it does, that will be, for me, the end of the correction. Right now, though, we're getting very, very, very close to we're getting very, very, very close to key levels here, right? I must just say one thing about Bitcoin and the way Bitcoin's trading. It's trading very unhealthy. And the reason why I say it's trading unhealthy is this market is just too over leveraged. There's just too much leverage in a very, very, very volatile market. And that's why every time we have a correction, we wipe out traders like crazy. I mean, just to give you some perspective, the COVID crash had 1.2 billion in liquidations. The FTX crash had 1.6 billion in liquidations. Last night had 2 billion in liquidations. We're still above 100,000 and Bitcoin hardly moved last night. So what's different? What's different is we're taking too much leverage. This market is too over leveraged. We are over leveraging on a very, very, very volatile asset. And the problem with over leveraging on a very, very, very volatile asset is that every move destroys a whole lot of traders. And those traders, when they get destroyed, half of them can never come back. And so for as long as we're in this unhealthy cycle of going into a volatile asset and taking leverage on a volatile asset, the problem is that we keep shooting ourselves in the foot. Because every time the market goes up, we put more money into leverage. And when we put more money into leverage, we get leveraged out or stopped out or liquidated or whatever you want to call it. And that is unhealthy because then we suffer casualties. And those casualties don't come back into the market. And this is an unhealthy pattern that needs to change. This is from 𝗙𝗘𝗧. It says the $1 million question. I don't think it's $1 million question. I think it's like a $10 billion question. What's happening in crypto right now? He says the crypto markets have officially raised $1 trillion of market cap since the 6th of October. But why? The answer to this seems to be more technical than fundamental. That is, crypto is still at crypto adoption is at record highs. Deregulation is in full swing and technology is advancing rapidly. However, leverage is at unprecedented levels, which is amplifying moves in the market, such as a 20 billion liquidation seen on the 10th of October. As a result, when uncertainty rises or technical momentum fades, downward swings are amplified. 1,000 traders are being liquidated per day. I'm going to read that again. Imagine you go to battle, right? And you're using like crazy weapons called leverage. And every time you go to battle, on average, you're losing 300,000 of the crypto troops every single day. So I agree when he says the long-term thesis is stronger than ever, but the short-term picture is, it's a wild drug. It's a wild, wild, wild drug. And I mean, we're not the problem. The problem are the big leverage takers, the ones that actually really, really, really get blown out of the market. So, okay, where are we now? We are at a point now where Bitcoin is at very, very, very key levels. We are now, this is the 50-week SMA. You can see that Bitcoin right now on the weekly is on that 50-week SMA. This is Ben Cowan's bull market support line. And he says that multiple closes below this bull market support line, weekly closes, would render this, he said 2 weekly closes below this line would render the end of the bull market for him. That's what he says. And now we're on the line, and actually last night, as you can see over here, we went below the line. We went below the line. This is currently where we're at. For me, I don't think that this level of 103 is as important as the $95,000 level. To me, the $95,000 level is the key level. I'm going to explain to you why. The first reason is, if you look at the chart, this is probably the most interesting level. It's the most resistance support a flip level in the market since November 2024. This line over here. Look at the chart action around this line, around the $95,000 level. The other thing is, it's below the $100,000 psychological level. And for me, that is the level that we need to remain below for this correction to end and for the bull market to actually continue. And so my thesis remains the same for now. For me, this is a normal correction in a bull market. I may be wrong. I've said there's a 30% chance for me that it's the end of the bull market. And if it is, I'm okay. And the reason I'm okay is because I'm holding multi-cycle assets. I'm holding Bitcoin, Solana, Hyperliquid, BNB, things that I'm willing to hold into the next cycle. I think what's going to happen is we're going to touch that $95,000 level. That's the key level for me. We may wick slightly below it like we did it a couple of other times, and then we continue with the bull market. And so I kind of said, look, if you are panicking now, it's because you haven't been here for very long. Because if you have been here for very long, you're not really fazed by 20% corrections. And that's pretty much where we are right now. We're at a 21% correction. And that's pretty normal. And that's why in September, I said, look, I'm in for a 20% correction. But listen, Josh and Fefe may be right. And I may be falling into this trap, which is you refuse to accept that the top could be in for the cycle. You didn't make the amount of money you wanted, and you refuse to think longer term. So you search for confirmation, any reason to tell you to hold on to your bags for a little bit longer. That's not the way I see things. I see the fact that I'm invested in multi-cycle tokens. I'm invested in tokens that are going to make impact into the world for a long period of time. And I'm going to hold them for multi-cycles. And so, yes, I could try and time the market, and I could have probably sold the 125 top and try to buy back now or maybe in a month. I don't really care. That's not my game. I made money by buying Bitcoin at $1,000, by buying ETH at $9 and at $27, and by just holding it for multi-cycles and not trying to trade in and out and in and out and in and out and in and out. Because I don't believe it. I don't believe that I have any advantage in trading in and out and in and out and in and out. I also believe that right now, it's very hard to say that we were actually in a bull market this year. Because if you think about where we're at, let's just talk where we're at, right? So this is the anniversary of, today is the anniversary of the election. This is the anniversary of when Donald Trump came into power and Kamala Harris lost. Thank God. I mean, ironically, Mamdani came in the day that Kamala Harris lost. Mamdani came in and is going to make New York completely socialist, right? That's what he says. I don't think he will, by the way. I think that even though he's mayor, I think the money will get to him. But let's look at Bitcoin's returns in the year to date. So let me give you a number here. Bitcoin has underperformed US Treasuries in 2025. US Treasuries. The safest and most risk-free, unexciting investment in the world, Bitcoin's underperformed them in 2025. And that's Bitcoin. I mean, if you were holding altcoins in 2025, let's just quickly get a snapshot over here. There's the altcoin from the 19th of January. This is a snapshot from CoinMarketCap. Okay. Bitcoin was trading at 101,000. That's pretty much where it is today. ETH was trading at 3,200. That's pretty much where it is today. XRP was trading at $2.95. Let's quickly just get a CoinMarketCap up here. Let's get a CoinMarketCap up here. And let's quickly just look at this. So XRP is now trading at $2.25. It was trading at $2.95 in the beginning of the year. Solana was at $250 in January. And if I look at where Solana is right now, it is at $158. BNB is up 50%. And that's because I think CZ was released from prison, etc., etc. But it's been I mean, hard to say that it was a bull market, right? Especially if you were holding altcoins. Because this is the price performance of the year. Now, yes, from the election pump, we've done pretty well. But if you look at it on a 1 year level, very hard to say that this year was part of a bull market. I mean, you cannot say with your hand on your heart that this was that. I mean, look at these returns. Just look at these returns. Minus 70% on Fluid, on WorldCoin. Minus 42% on Fluid. Minus 50% on Curve. Probably should have appreciated last year's pump much more than we did. The good news is, though, that I think that the following is going to happen. I think the government shutdown is going to end in December, or before December. I think the TGA account is going to get emptied again, and the money is going to go back into circulation. I think that, and if you look at Bitcoin, Bitcoin doesn't like government shutdowns. Like the last government shutdown we had in 2018, Bitcoin went down 15%, and then as soon as the government opened, Bitcoin shot up again, right? I think that we've had 30 days and we've taken out the bottom. I think that we know that these corrections in a bull market do take about 30 days, and they do take out the bottoms, and I think we've already done that. I also think that my checkpoints are being met. My one checkpoint was the price checkpoint, where I said, look, like I want Solana at 145, I want ETH at 3,200, and I want Bitcoin at 98 or 95. I also want more 2/3 of people to think the bull market's over before we can actually go there. And you can kind of see that I keep asking this question every single day. And I know some of you are voting every single day. And I also think that the fear and greed is starting to reset. Remember, I said to you, I want to see 3, 4, 5, 7 days of crypto fear and greed being in extreme fear. So we're now 2 days in extreme fear. Okay, now I guess today is going to probably get a little bit better, but I want to see like a week of extreme fear, and that's when I'm going to start deploying the last of my capital. And that's pretty much what my thesis is. I'm also pretty excited, and the reason why I'm pretty excited is because I actually genuinely see crypto making a difference in the world. If you look at Total 3 hasn't performed, or has performed, but if you remove the stable coins, it hasn't performed. But what that shows you is that stable coins, which is one of the killer use cases of crypto, really is taking off and changing the world. Another thing that I think is really changing the world is prediction markets. I love this tweet over here, which said, polls is about who do you want to win, and prediction markets is about who do you think will win. That's why polls can sometimes be 55-45, while prediction markets can be 90-10. Like, as you've got to take you've got to take a moment to realize what an impact crypto's made. We've created a new financial market, which is effectively a binary option, which is called the prediction market. And I think we're just about to see the beginning of prediction markets. You know who predicted the New York mayoral election way before any poll was happy to predict it? The people that actually put money on it. People on Kalshi, people on Polymarket that actually put money on it. And so, like, you could get distracted by all the noise of markets not moving, or you could actually look under the hood and say, hold on, we've created a brand new financial market called prediction markets. And by the way, I mean, look who called it. Who called the New York mayoral elections? It wasn't the Wall Street Journal or CNN. It was Polymarket, and it was exactly 1 minute after the polls closed. 1 minute. 1 minute. Okay, you got to celebrate that. You got to celebrate it. By the way, Polymarket's accuracy is 95.2% right now. Do you understand how big prediction markets are going to be going forward? Like, can you even fathom? We've basically recreated financial markets into prediction markets, and it's starting to work, and it's more accurate than polls have ever been. And we're just at the beginning. I don't know if you guys have ever seen this site. The site's called Rain. Go and look at it. One of our sponsors. Rain is a prediction market, but anyone can create any market that they want. So you can go and create whatever market you want, and there will be predictions on that market. Now, look, they do have a token. I'm not telling you at all to buy the token, but I'm telling you to go and mess with this platform, because they will be doing an airdrop pretty soon. And if you mess with if you create markets and people trade your markets, not only will you get the creator coins, but you'll also get a big thing in the airdrop. And literally, you can create any market. My wallet's not signed in on this computer, but you can literally go and create any market that you want using this. Go and check it out, rain.one. That is one of those things. And so I think, guys, it's very, very, very easy to get carried away and look at the prices And especially when you take prices at a certain point in time. When you look at prices at a certain point in time, and the point in time is right now, when we're in peak extreme fear, and when the markets have been hit been hit so hard, it's very easy to lose sight of what's actually happening under the hood. I maintain that it's probably not the end of the bull market, but if it is, I'm holding tokens that I'm okay to hold right through the bear market. Just like I was okay to hold Solana from $150 last cycle, $200 last cycle, right through, and I'm okay to hold it on the way up. I have a very, very, very big conviction in the fundamentals of what's actually happening here. And if you're holding the right tokens, well, yes, this volatility is crazy, but we know we're going to be better off for it going forward. And that's why we're still here every single day, bringing you crypto love and crypto wisdom. So let me know what you think in the comments. Otherwise, I'll see you guys again tomorrow. Until then, don't lose sight and trade well, my friends.